All right, so we got recording going. Great. Wonderful. Okay, so I'll kick it off. Let me just get my notes. Great. All right, good morning, everybody. My name's Tim Rana, managing partner at Mercy Corps Ventures, and I'm really glad to be joined by Nick Hughes today. We're going to have a conversation about the intersection of financial inclusion and the carbon markets. So ag land use and natural resource management will need to really transform in the coming decades to become more sustainable, reliant, and equitable. We see financial technologies as having a massive opportunity to power the entire carbon finance ecosystem. And we're here to talk with Nick today, who brings incredible experience in digital financial services about just this intersection. Because often when we talk about fintech, there's not quite that overlap between fintech and the carbon markets that we see today. But some of what Nick's history in the space, as well as what he's building now, are quite relevant. So excited to dig more into it. And so to kick us off, Nick, would love if you could introduce yourself and Cavex.
Yeah, sure. Thanks, Tim. Well, pleasure to join you. So my background is digital finance, as you say. About 20 years ago, started a project with a small team at Vodafone, running with our network operator partner in Kenya called Safaricom. And it was all about how can we use digital technology to provide financial inclusion. And that became, the project grew and grew, and it became M-Pesa. So M-Pesa is now big, tens of millions of customers using it every day, using their phone to do financial transactions. And it's been sort of held up as a good example of how we can use technology to drive financial inclusion. And it's been copied all over the world. And it for me, what that was about was using fintech, but to solve the problem of access. And I think in the carbon markets today, we've got a sort of similar issue. It's a beautiful economic concept, the carbon markets, and they've been around a long time. But they haven't really worked very well. But there's also a big problem around who can get access into those carbon markets. It's relatively expensive to get in. It's quite time consuming. And yet we have at our disposal some brilliant financial technology, not least mobile money and everything that comes with it, but also the ability to monitor things remotely, to gather data from all sorts of different ways, to gather data in on the activity that's behind a carbon credit. And so I set up a new company a couple of years ago, right into the headwinds of COVID, and then Tim, as we were just chatting, all the sort of macroeconomic sort of headwinds as well. But I'm pretty sure there's a much better way to unlock access to these carbon markets, in the same way we unlocked access to financial services 20 years ago with mobile money. Yeah, so we've been building, my new company is called 4R Digital, and we've been building a platform with support from UK government, FCDO and Shell Foundation and FSD Africa. And we've been building an MVP that shows how we can use digital technology to connect buyers directly to projects, see the data behind the projects, and use digital finance to move money around. And for me, it sort of solves a lot of the problems that we see today in the voluntary carbon markets. But still early days, and we're, I think for me it's got high potential, but we've got to get in and we've got to show that there's a better way to make these markets work. So yeah, we're quite early on in our journey, but it's it's an exciting project.
Wonderful. Yeah. Thanks for that, Nick. And I think you have such a tremendous wealth of expertise in digital financial services. So I'm excited to dive in a little bit deeper. So I mean, contextually, there's a lot of different scenarios for how carbon markets grow. Bloomberg NEF says that anywhere between growth of where we are today from about $1 to $2 billion a year transacted annually to upwards to 50 billion, to upwards potentially 1 trillion by 2037. It depends on a lot of things, policy, fixing some of the things that are wrong with the market, as we know right now. Depends on actions by private sector, mitigating versus direct carbon removal, all these different things. But regardless, this is a space that most experts anticipate will be tremendous growth, and a lot of things need to change for it to reach that potential. For those who aren't really familiar with the carbon markets, I mean, I think you can, it'd be great if you could describe a little bit about what CAVEX is doing. And
Yeah.
then for this discussion in particular, where do you leverage digital financial services
Yeah.
to kind of unlock some of the inhibitors you see for growth in this space?
Yeah, sure. Yeah, sure. So remember, what I was saying a few minutes ago, fintech is an enabler, and I think there's a brilliant opportunity to enable access into the use fintech to enable access into the carbon markets. And I mean, the carbon markets are it's a broad space. You've got everything from some new emerging technologies which are going to get important around things like direct air carbon capture and lockup of carbon. You've got all sorts of exciting work around blue carbon and soil carbon. And then you've got the sort of stuff we were doing at Mcopa, and another business I founded, where we were displacing a hydrocarbon fuel, kerosene, and that's a crediting opportunity as well. So there's a real spectrum of technologies at play and different ways in which credits can be monetized. But for me, what fintech lets us do, if I can move a small amount of money around in response to some data that's verifiable by a third party that proves an activity has happened, then I've suddenly got some tools that I can use to bring finance down to people that are removing the carbon on the ground. And that, for me, that's very important, because unfortunately, Tim, you'll know this from some of your projects, a lot of the monetization process sees funds going out in the middle. They go to the standards bodies, the VVBs, the so-called verifying organizations, the auditors. And by the time the project looks at what it's going to get for its carbon credits, it can sometimes be as low as 40% of the value that they've been sold to a buyer. And for me, that's just a sign of an inefficient market. And yet we don't need to do it that way. We can monitor things remotely in great levels of accuracy. That can be audited by a third party, and then we can use, some people refer to these as smart contracts. So the data show me something has happened, I can trigger a small payment linked to that data, and that's really what we're building in CAVEX, the Carbon Value Exchange. And there's lots of opportunities. We're sort of turning away projects that want to come onto the platform. So I don't see any shortage on the supply side, because as we were saying earlier, it's actually quite hard and expensive to get into the markets. That means many organizations, particularly the medium size or small size projects, simply don't bother with it because they don't have the money, they don't have the time. And so I think there's an opportunity there in that long tail of projects across the spectrum of different carbon crediting opportunities. And then on the buy side, I think there's demand. And the great thing that's happened in the last 2 or 3 years is this commitment to net zero, because suddenly lots of organizations, whether they're sort of mandated into it with regulation, or they're doing it from a voluntary basis, i.e. a company setting its own sort of climate strategy and a net carbon commitment, net zero commitment, that drives the buy side. And so those two things together, the ability to reach smaller projects and this huge demand for credits from companies that have set a net zero target, I think that gives us an opportunity. There's lots of debate. As Tim, I know we talked about this before. What are the role of the carbon markets against the climate strategy? And I think many people in the sector, buying credits can only be a part of a solution, and typically part of a solution to reach net zero. I think many people call greenwash pretty quickly if people are using credits to sort of excuse themselves from polluting, on the other side of the fence. And so, within that context, I think carbon markets are an opportunity only where it's part of a broader climate strategy, which ultimately is about reducing emissions. But if you can't quite get to net zero, using credits to sort of make that gap up, I think is the opportunity. And we're seeing a lot of demand, not just the big organizations like my old gang at Vodafone or Microsoft or the big companies. I think we're starting to see small and medium enterprises set net zero commitments and sensibly use credits as part of a strategy. And then digital finance, for me, just puts the sort of makes all of that work. We can link small payments to verifiable evidence of the carbon credit happening. So there's lots of potential, and it's for me, it feels a little bit like the early days of mobile money. you can see lots of people can see how it can solve problems for them. And we just need to build some momentum and get into it and do it in a sort of a, and we've got some great partners we're working with, but it's about proving that we can show the markets can work a different way. And then, yeah. So yeah, that's a lot. That's, it's a big topic, isn't it? It's quite a complex topic, but
no, appreciate that. I know everybody comes into carbon markets with different levels of either bias or knowledge or what have you, right? So it's good to unpack it a bit. I mean, one thing I think in our conversations you've touched on quite a bit is, in particular for the carbon markets, there's obviously lots of technological innovation that can happen. But I think one thing you've pushed on a lot is that we have a lot of the tools already at our disposal, including digital financial services. I'd love if you could talk about that a little bit more, because sometimes I think, there's a conversation about, well, we need to invent this, we need to do something totally differently, et cetera, et cetera. But I think a lot of what you're saying with Convex is really actually, from your own experience, we have a lot of these things available. So it's how we package them.
Yeah, definitely. Yeah, it's a bit like a jigsaw. It's a complex jigsaw for sure, but I think we have all the bits, on the table. We just got to put it together. So, well, let's touch. There's three elements to it. I think there's, first of all, the ability to prove that carbon credits activity has actually happened. I mean, this has also been the topic of some of the sort of greenwash in the press, that some of these credits, they're quite nefarious. Nobody's really got any evidence that this crediting activity has happened, whether it's on a sort of forestry scheme somewhere, or there's lots of bad press about it. And that's almost inexcusable, because we know how to monitor things remotely now, whether you're using satellite imagery, looking at canopy structures, or you've got sensors on the ground looking at soil carbon, or you're doing what we did at MCOPA, where you've put some communication technology inside some hardware so you can monitor we're doing some work with a company called Davis and Shirtliff that are doing solar irrigation on farms. We can put the technology in the pump, so remotely from anywhere in the world how many solar kilowatt hours have been generated to produce that much water. And so there's no excuse for not being able to measure the carbon crediting activity anymore. So that should immediately get rid of some of this question about, is that activity genuine? Has it happened? And if you can measure it, then a third party can come in and can audit it. And so that's one part, and the measurement. Then you have to create records, and this is where I think there's some brilliant blockchain work we can do about creating ledgers. We could have a long debate about distributed blockchain. Many of the fintech people, of course, we all get excited about, okay, well, we get excited and then we get disappointed by the whole sort of distributed blockchain piece. But the ability to keep a record, make it an immutable record, so that anybody who's involved can look at it and see, well, who owns that carbon credit and when was the transaction done that linked to it changing ownership. So I think we have that ability with digital ledgers, and from the fintech world, we can use a lot of that. We use in our platform, we use it's an event-based ledger. So everything that happens on the platform, there's a record kept, and that's stored forever. And so you can see how credits get created, transfers happen, ledger entries take place, and so you've got this ownership. It's pretty clear and transparent to everyone. And then, of course, ultimately, how do you move money down to people that are doing that work on the ground? So you've got the observation, the data capture, the ledger entries, and then it's about the other part, the third part is moving the money. And there's, we know, of course, today, if I want to move $10 or £10 or euros down to an M-Pesa account to put 1,000 shillings in an account, I know I can do that. So again, there's no excuse to not be able to move money from a buyer all the way to the project, and that could be a smallholder farmer running that solar irrigation project. And so you put all of those bits together, we know how to do all of that, and we've done it at scale. We've got tens of millions of people using their phones to move money around. We're creating ledger entries frequently in many different applications, fintech applications. So yeah, I think it's all there. I just think we've got to try and shift this this old school way of running carbon markets, and which was created in the 90s. Actually, I'm giving away my age now, but I was at BP and we built a carbon trading system in the 90s under cap and trade model. what I discovered at M-KOPA as we took M-KOPA through the gold standard was that things haven't really changed since the 90s, and yet we've got this technology. Let's use this technology properly to reward people for removing or displacing carbon. And so yeah, Tim, I do think we've got it. We've got the technology. We just got to package it together, and we've got to get buyers' confidence up, and then see if we can make the markets work in a much more equitable way, where ultimately more money goes down to the projects that are doing work on the ground. Yeah,
absolutely.
sounds
I
easy.
don't think. Oh, go ahead.
No, I'm laughing because sometimes I get accused of oversimplifying things a lot, and so it does sound easy, doesn't it? But I do think we've got all of the tools we need to make those markets work. So yeah. So sorry, back to you. Yeah.
Yeah, well, no, I think part of it too is just not like it's not easy, but what's the minimum level of complexity we can all accept to
Yeah,
make this
exactly.
work?
Yeah.
And again, I think not reinventing a lot of the tools that are already out there and have
Yeah.
struggled for so long to figure out user interface and all these things. I think
Yeah.
we've had conversations about this, but a lot of the solutions right now are just introducing more complexity
Yeah.
potentially to an equation where we can't have that.
Yeah,
And
definitely.
that's where I was going to go to a little bit next was, you know, like where do you feel like, at least from a digital financial services perspective, like what are some of the hard lessons you feel like you learned from M-KOPA, from M-Pesa, from your
Yeah.
history that infer the design of CABEX? Whether it's
Yeah.
user interface or I'd love to just if you could unpack that a
Yeah.
little bit more.
Yeah, no, well, look, and you're spot on. It's all about making it work for that end customer. I mean, again, we all, those of us in the fintech space, we do get excited about the shiny bits of the tech, but if you lose sight of the problem you're solving for your end customer, then it starts to drift away from, I think, from scalability. And so you might not remember the early days of M-Pesa. It wasn't the platform we see today. It was a very simple proposition: send money home. That was the strap line. And once you get out with a very simple proposition, I think you can then layer more complexity and more services later. Same with M-KOPA. M-KOPA was pay-as-you-go solar energy, but it became an asset financing business, and it's evolved into that now almost completely, where you finance one asset using digital money. But then you build a financial relationship with the consumer. In carbon markets, I think we have to, this is the bit of work that needs doing. We've got to keep it really simple. We've got to say, look, if you're a smallholder farmer and you use that solar irrigation pump, to stick with that one example, then you will get, a few dollars directly to your wallet that help you make the choice to use that clean energy. Will carbon ever make the total business case to move towards a solar irrigation system? I don't think it will. I think it's a useful contribution to the economics of switching fuel. So going from a diesel pump set or a petrol pump set to solar, if you can help make that decision because you've got some carbon revenue. But I don't think it's ever going to fully support the use of a solar irrigation pump. I do worry a little bit that we can't build businesses purely on the carbon revenue. I'm not sure that's sustainable. Back to your point earlier, it does depend where the carbon price goes, what we see demands for. Of course, there's and different. Each use case is different. So we know a cook stove can displace charcoal, and there's a crediting opportunity there. But we've got to be careful we don't over credit some of these activities, and otherwise we walk back a little bit towards the sort of greenwashing claims. And there are some technologies coming, which, especially some of the things like the air carbon capture that I mentioned earlier. That's brilliant technology, but it's only going to, at the moment, it's only taking a few hundred tons out, but ultimately it can take millions of tons out. And we should be betting on some of that long-term technology. But what we're saying with CABEX is actually there's some stuff we can do right now. We can get money down to the farmers, down to the small businesses choosing clean energy, down to the households choosing clean cook stoves. We've got to do some of that now, and we can do that sort of immediately, and it sort of brings revenue towards the global south. And then we've got to keep the bets as well on some of the long-term strategy stuff. So just staying focused. For me, the biggest lesson of my lessons at M-Pesa and M-KOPA, just stay really focused on solving for that end customer. And in this case, it's getting money into the wallets of the people on the ground doing doing the work to take carbon out. So
Yeah,
yeah,
makes
again,
sense.
yeah, it does make well, it's not an easy journey because we've built an industry. Unfortunately, you've got legacy um, challenges because people, well, what about the standards? And if we thought too long about what the banks thought of mobile money, you would probably never start in things like M-Pesa. You have to sort of sometimes sort of try, and it's uncomfortable, but you've got to try and say, look, we've got to shake the market up a little bit and change the way we do it. And so that's really what's behind our platform Cavex. Yeah.
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 And how do you, I know this might be a little bit outside of Cavex's focus, but beyond just the transfer of money and
Yeah.
payments, for a user adopting smart irrigation, whatever it is, right?
Yeah.
Where do you see the opportunity on maybe like other types of financial services,
Yeah.
maybe the actual financing of a product or the
Yeah.
financing of a regenerative
Really
ag
good.
project? Like I'd love to
Yeah.
hear, like we were just talking before this call on seaweed,
Yeah.
blue
Yeah.
blue carbon and so forth. Like it
Yeah.
seems like one of the biggest inhibitors in this
Yeah.
market, especially for larger projects, is just the financing. It's
Yeah. Exactly.
similarly very
Yeah.
expensive, very risk averse. Yeah,
Yeah.
where could digital financial services play a role there potentially?
Yeah, no, that's a really good question, and there's a couple of aspects to that. One is, as you say, the upfront financing to help organizations and communities maybe make the decisions to move into a low carbon project. So that's definitely key, and I think there is financing available. What we can use platforms like Cavex for is effectively it becomes results based financing, because you can say here's the money up front. The deal is you've got to see the data come onto a platform like Cavex, and that could be part of the overall package. So I think linking to results-based financing is an interesting opportunity. And then there's much work to be done to get a little bit more sophisticated on how we move money down to projects and communities for that future value. So if you take mangroves are pretty quick growing, etc. But if you take a reforestation project or a mangrove project, your carbon value accrues in the future. So what can we do now with digital finance to bring forward some economic benefits and maybe front load to the communities and the smallholder farmers to let them reinvest in their activities, so that but you're almost mortgaging the future value of the carbon credits, because the carbon doesn't lock up in the biomass until year, it could be 5, 10, 15. So somehow we've got to start getting, I think, rather than just buy and sell the credit, what else can we do to construct digital financial services that take that long-term view and maybe allow more investment upfront in the smallholder farms so they get economic benefit in other ways. So there's a whole stack of work to do, and that for me is that it's almost the next level of carbon markets, because you're starting to build longer term digital financial solutions around a long-term asset. And yeah, there's lots of work to do there, and we can all learn the lessons from the microfinance space here, where and some good and some bad lessons from microfinance. But it's definitely open, because I think we've got to be smart about that financing, because these are long-term assets, and yet we want to sort of bring forward the short-term economic benefit to some of these communities. Yeah.
Wonderful.
Yeah.
Well, we're just going to wrap it up here, but Nick, any
Great.
closing thoughts or remarks?
Well, again, it's like maybe it's having spent 20 years in this space, it is hard, but I am genuinely an optimist here. I think we've got this technology. We know, we've seen it being applied. We just got to pull it together and use it to good effect. And that's the complex bit. It's sort of packaging it all up and then making it relevant to people on the ground. But I think we can do it. I think we've set ourselves some ambitious targets with Cavex. We think we can move 100 million tons across the platform over the next 5 years, and that's I think that's achievable. So yeah, I'm on the optimistic side here. I think we can do this, and we can do it now. And well, as we were discussing at the start, we need lots of solutions out there to try and address some of these challenges, because they're big, horrible challenges. But but I think we can do it if we turn our minds to it. So
Great. Well, thanks, Nick. It's
cool.
always a pleasure to speak with you and hear your
Yeah,
thoughts
likewise.
on
Yeah,
what you're building in
yeah,
the markets. And Yeah,
Yeah.
wonderful. Thanks, thanks everybody for joining us today. And yeah, Nick, if you want to we'll drop in a link to Cavex and a
Yeah,
little bit
great.
more on the platform and how it works, so folks can kind of interact with it and learn more about your work. But thank you very
Yeah,
much.
great. Yeah, no, it's been a pleasure. Thanks, Tim. Yeah.
Thanks, Nick.
Good. All right.
I'll turn off the
See you.
recording.
Yeah, cool.
Let's see. I always
Yeah.
forget how to do this on here.
Yeah.
There we go.
Yeah.